Good evening, guys. Can you hear me? Please let me know whether I'm audible. You can put in the chat or else you can raise your hand. Please tell me whether I'm audible to you. Okay, I can see one has raised the hand. How about the others? Can't you hear me? Okay, Ravindran also has raised the hand. Okay, fine. Fine, Laman. So now we can start the session for today. So when it comes to AAT2, okay, when it comes to AAT2, this session, I am focusing on some specific areas within the given 2 hours of time, which will help you to grab some marks. Okay, which will help you to grab some marks. So, I am not taking your valuable time to describe who I am and or else to say what hypothesis, or else the paper structure actually, because you already know what is the paper structure. Therefore, I'm not going to take time for those kind of stuff. Okay. Rather, I will directly start the technical things, and I will discuss the questions with you. Okay. So please make sure you have the paper with you. Paper was shared with the admin today morning. So I guess you have got the paper, and I will screen share it when the questions are being discussed. Okay. So you need to keep it with you, and also you need to have a book with you, okay, or some piece of papers where you need to take notes. You need to work out the questions along with me. Hope you are clear. So are you ready, guys? Are you ready? You can put a thumbs up. You can raise your hand. Are you ready? Okay, only one person is ready. How about the others? Please, let's make this more interactive. Let's make this more interactive. Please react. Please react. Okay, fine, fine, fine. Where do I get the paper? Please check, Mr. Dara. Please check. Okay, fine. So let me share my screen with you. Let me share my screen with you. Okay. This is the paper. This is the paper. So hope you can see this paper is not a model paper. Okay, this is not a model paper where exactly the exam type, but this paper contains some model questions. Okay, this paper contains some model questions where you will get a support to pass the exam or to get a prize. Okay, so I have selected four key areas. Four key areas where most of the students are struggling, and also due to the lack of time, where in most of the classes the areas that are not covering. So I have selected four key areas, and I have incorporated four questions from those four areas. Therefore, Lamai, let's start from first question. So I have incorporated the first question from overhead cost. You know what is overhead cost. And here I have given the past paper analysis. So I have taken the papers where the same question has been tested, and I have included what has been tested here. What are the things that the examiner is keen on asking from you? So I put this table just to give you an idea what are the things that examiner is looking for from you. And I have made a prediction also, but it's just a prediction. I'm not sure whether it will come or not. But anyway, I have made a small prediction for you. I have made a small prediction for you. Okay, fine. So when it comes to overhead cost, let me brief you what is overhead cost in summary. Okay, in summary, then let's move on to the question. Lamai, you know, we have costs. We have cost. Cost are the monetary value of resources that we use for production or any kind of activity. So these costs can be classified as direct costs and indirect costs. Direct costs and indirect costs. The basis for this classification is the identifiability. Based on the identifiability, we can classify cost as direct cost and indirect cost. Okay. So then what are meant by direct costs? So the direct cost means the costs that can be directly identified. The cost that can be directly identified with a cost unit. With a cost unit. We can say this is the cost per unit. This is the material cost per unit. This is the labor cost per unit. Therefore, a direct cost means the cost that can be directly identifiable per unit. Per unit. But when it comes to indirect cost, we can't directly identify. We can't directly identify. Okay, we can't directly identify with a cost unit. With a cost unit. So if we can't directly identify, to give each and every cost unit a indirect cost portion, we need to follow a process. Okay, to give each and every cost unit an indirect cost portion, we need to follow a process. Okay, and this indirect cost is also known as overhead cost. This indirect cost is also known as overhead cost. Clear? Lamai, when it comes to overhead cost, if we classify again this overhead cost as non-manufacturing overhead cost, non-manufacturing overhead cost and manufacturing overhead cost. Non-manufacturing overhead cost and manufacturing overhead cost. We can identify these two categories. So that is the base whether the costs are used for production. Whether the costs are used for production, the purpose. The purpose. So if the cost is used for manufacturing purpose or the production purpose, then that cost is identified as manufacturing overhead cost. If not, then those are identified as non-manufacturing overhead cost. Okay. Now I told you, since we can't directly identify the overhead cost with a cost unit, we need to follow a process. Okay. We need to follow a process. Okay. We need to follow a process. For what purpose? This process is required to identify the cost for a cost unit. Clear enough? To identify the overhead cost for a cost unit. For a cost unit. So for this purpose, we need to follow, okay, we need to follow a process. This process has 4 steps. This process has 4 steps. First of all, we need to collect the cost. Okay. First of all, we need to collect the cost. We need to collect the cost. We need to identify the cost. These are the overhead costs with us. Then we need to allocate. We need to allocate the cost. We need to allocate the cost. What is meant by allocation? Lamai, even though, okay, even though the overhead costs cannot be directly identified with one single cost unit, some overhead costs are there. Those overhead costs can be identified with a cost department. Cost department, or else we say cost pool. Cost pool එක. නැත්නම් අපි කියනවා cost center එක. Cost center එක. So costs that can be identified. Costs that can be identified with a cost center. With a cost center are allocated to the respective cost center. Are allocated to the respective cost center. Then after allocating, there are some costs even we cannot identify with a cost center. There are costs even we cannot identify with a cost center. Then such costs we need to apportion. We need to apportion. So apportionment of the cost. Apportionment of the cost. So if even the cost cannot be identified with the cost center, okay, not the cost unit, the cost center, we need to apportion that cost. We need to apportion that cost. Okay, we are apportioning these costs to all cost centers. We are apportioning this cost to all cost centers. To all cost centers. Okay. After that, after this apportionment, we need to do something called reapportionment. We need to do something called reapportionment. What is meant by that? What is meant by this reapportionment? Let me teach you. Let me teach you. Lamai, when it comes to this apportionment of the cost, when it comes to this apportionment of the cost, this cost apportionment will apportion the cost. Okay, this will apportion the cost for every cost center. For every cost center. For every cost center. Simply every department. Simply every department. Okay, simply every department. So this will apportion the cost. This will divide the cost. Simply dividing. This will divide the cost for every cost center. Every cost center. But I know you have already learned that these cost centers are again divided into two as production cost centers, and service cost centers. Service cost center. So these cost centers are again identified as production cost centers and service cost centers. So Lamai, at the third stage, at the apportionment stage, we apportion the cost irrespective of whether the cost center is production or service. We are apportioning the cost for both production cost centers and service cost centers. Hope you are clear. Okay. But there is an issue. What is the issue? The issue is that we can't assign the cost of a service cost center into a product. Okay, we have that problem. What is that problem? We can't assign. Okay, we can't assign the cost. We can't assign the cost of a service department, service cost center into what? Into a cost unit. Into a cost unit. So we can't do that. We can't assign the cost of a service cost center into a cost unit. Therefore, we are doing another thing called reapportionment, Lamai. Reapportionment. So what is done at the point of reapportionment? We reapportion, okay, we reapportion the service costs or the cost allocated or cost collected in the service cost centers, okay, service cost center costs are reapportioned into production cost centers. Reapportioned into production cost centers. Why? What is the reason? The reason is we can't assign the cost in a service cost center to a cost unit. Therefore, we need to take the costs collected in the service cost center into the production cost centers. For that purpose, we are doing reapportionment under third stage. Okay. So after doing this reapportionment, we come to the last step, that is assigning the cost to a cost unit. Assigning the cost to a cost unit. We name that process as absorption. Absorption of the cost. Absorption of the cost. So in the absorption stage, what we do, we assign the cost to a cost unit. To a cost unit. Okay. Now, in this flow, you identified direct cost can be directly identifiable with a cost unit, but indirect or the overhead cost was not. So when it comes to manufacturing overhead cost, following these four steps, somehow we are assigning a cost into the cost unit. We are assigning the cost into the cost unit. So to record these four steps, Lamai, okay, to record these 4 steps, okay, to record these 4 steps, we prepare a sheet or a report, okay. That report is named as overhead analysis sheet. Overhead analysis sheet. So using this overhead analysis sheet, we are allocating the cost, apportioning the cost, afterwards calculating the absorption rate. Okay, so we are doing this stuff. Lamai, this is the summary of overhead cost. Some more point, okay, some more point before I start the question. So when we are going to absorption state, okay, when we are going to absorb the costs, okay, this absorption is done for only for production departments, Why? This absorption is done for only production departments. Why? What is the reason? Because at the reapportionment level, we have reapportioned all the service cost center cost into the production cost centers. Therefore, the service cost center cost is zero. The entire manufacturing overhead cost is now at where? At the production cost centers. Therefore, we are absorbing only the production cost center or production department costs. So to do this absorption process, we calculate something called OAR. OAR. That means overhead absorption rate. Overhead absorption rate. That is called OAR. OAR. So how to calculate this OAR? I will give you the general formula. So we need to get the budgeted overhead cost. We need to get the budgeted overhead cost, especially it is for manufacturing. So budgeted overhead cost, and we need to divide it by what? We need to divide it by budgeted activity level. Budgeted activity level. We need to take the budgeted overhead cost and we need to take the budgeted activity level. All are budgets, not the actual. All are budgets. So if I further explain, when it comes to this budgeted activity level, this budgeted activity level can be either machine hours, or else it can be labor hours. Or else it can be a percentage of direct labor cost. Likewise, there are 6 to 7 activities that we can identify as a budgeted activity to absorb the OAR or to absorb the overhead cost. So in calculating absorption, we need to first of all calculate the overhead absorption rate. So my dears, this is the entire summary of your overhead cost chapter. So this is what you require to learn. If you did not understand at the first instance, okay, I did this just to recall your memory. Okay, not to first time teach, but to recall your memory. So in case if you did not understand this, you can watch this video again because it is a recorded one. You can watch this video again. Okay, my dears. So please raise your hands if you understood something. You can raise your hands. Okay, I can see some of you are raising the hands. Okay, fine. That means you got an understanding. Okay, fine. Now let's go to the question. So when I discuss this question, all the other stuff will be refreshed. So Lamai, this is the past paper analysis. You can see in each of the 3 times that the examiner tested this thing, he has asked to prepare the overhead analysis sheet. Here, prepare the overhead analysis sheet. Therefore, this time also, in case if the examiner tests this, okay, he will ask to prepare the overhead analysis sheet. If you can see, in all January exams, in the new syllabus or this current syllabus, it has been tested. You are also sitting for a January exam. Maybe CK January 2022 January also tested, 3 also tested. Therefore, you are also sitting for a January exam. Therefore, it has a high probability that the thing can be tested. Okay. And in 2021 and 2023, they have asked to calculate the overhead absorption rate. And therefore, I believe in this time also they can test the overhead absorption rate. Finally, in 2021, they have asked to calculate the estimate cost of a sanitizer bottle. It's relating to that case study. Anyway, this kind of a thing can be tested. Therefore, let's prepare for the examination. So I have prepared the question based on my prediction. It can be varied. Anyway, I will do the question with you. Okay. Now, let's start. First of all, let's look at what is the requirement. Okay. Even at the examination, first you need to check the requirement. Check the requirement. Without checking the requirement, don't read the entire question. It will be in vain. Aparade. Okay. So let's see what is the requirement. You are required to prepare a statement showing how the overheads are allocated and apportioned to each department. That means, Lamai, you need to prepare overhead analysis sheet. Overhead analysis sheet. You need to prepare overhead analysis sheet. Clear? Then you are required to calculate the overhead absorption rate, OAR. Now I gave you the formula to calculate OAR. OAR per direct labor hour. Therefore, here the activity is what? The activity is labor hour. Hence, we need to calculate the overhead absorption rate based on what? Based on the direct labor hours. Okay, fine. Now, first, let's have a glance of this question because we need to have a small understanding about the entity to prepare the overhead analysis sheet. So we need to know how many production departments are there. We need to know how many service departments are there. Therefore, first of all, let's read that. Gloves LK Private Limited, which is a medium scale manufacturer of hand gloves, has 2 production departments. The company has 2 production departments, manufacturing and packing. Okay, manufacturing and packing. Sorry. Then a service department. Then 1 service department. Okay, it is maintenance department. Fine. AAT. Now we can move on to drawing the template. Drawing the template or the format. Here I have written. I hope that you can see my screen properly. So here, first gloves LK. That means the company name and the overhead cost analysis sheet. Okay. First of all, you need to write the description. What is the cost? And then the basis. Okay, the basis. You will learn how to do that. And the total amount. And then production department wise allocation and the service department wise allocation. So you need to prepare this template. Now it's 7:29. I will give you 2 minutes till 7:31. Please prepare the format in your book. Format එක ගහගන්න ටක් ගාලා in your books. I believe that you are drawing the format because it is important, Lamai. Okay, time is up. Time is up. Please raise your hands if you have drawn the template, drawn the format. Format එක ගහගත්තා නම් පොඩ්ඩක් උස්සන්න. Because it is important. It is important you to have the format because otherwise it will be in vain. Format එක නැතුව වැඩක් නැහැ ළමයි. Okay, great, great, great. Now let's start. Now let's start. Fine. Now let's read the question, Lamai. So as I told you, we need to follow the 4 steps. First of all, we need to collect. Then we need to allocate. We need to allocate. We are allocating. We are directly allocating the cost that can be identifiable with cost centers. Cost center එකත් එක්කලා හඳුනා ගන්න පුළුවන් ටික අපි identify කරගන්නවා. Then we move on to apportionment and reapportionment. Therefore, first of all, when you are looking at the question, please check whether there are any kind of a cost that can be directly identified to a cost center. Okay. So the company has estimated the following production overhead cost. They have clearly mentioned the company has estimated. That means it's a budget. That means it's a budget. It is for the next period. It is for the next period. Okay. Depreciation, building rent, supervision cost, quality control expense, electricity, they have given. And the overhead absorption bases are given. Overhead absorption bases are given. Machine hours, flow area, use of electricity, employees, number of quality inspection, direct labor hours, apportionment of the technical cost. Okay. Anyway, now can you see any kind of a cost that is directly given to this department? In the examination, Lamai, for your examination, if there are any directly allocatable costs, that means if any cost can be identified with a cost center, okay, then they will be given that, especially in the question. So under this overhead absorption basis, or with this overhead absorption basis, they will give the cost name and they will give the rupee value for each department. Okay, they will give the rupee value for each department. So in case if the examiner has given a cost for each department wise, then you need to take it as an allocatable cost. But in this question, no such cost is given. No such cost is given. That means, Lamai, there are no any directly allocatable costs. Okay. So first step is done, the collecting part. The collecting part is done by the examiner and given to you. So the second one is allocation. The third point. Third point, what? The third point is apportionment. Lamai, let's start with depreciation. So let's see. Description. I am putting machine depreciation. Machinery depreciation. Basis. Now we need to take, okay, we need to take a suitable basis. You know, usually machine depreciation is based on, okay, machine depreciation is based on machine value. In financial accounting, you calculate the depreciation by multiplying the depreciation rate into the depreciable amount. So if the cost of the machines are given, then you can use that as the basis. But in this question, the cost figures are not given for the machines. Therefore, instead of the cost figures, they have given machine hours. Machine hours දීලා තියෙනවා. So you can use machine hours as the depreciation base. Okay. So we have the total cost 3.5 million. Okay. We have the total cost. Here I am putting total cost 3.5 million. Okay. Then the basis. Basis is what? Machine hours. I'll write like this. Machine hours. You also need to write like this. Machine hours. And then we have three departments, some ideas. We have three departments. So we need to get a ratio. We need to get a ratio. Anupatayak ganna ona. Okay. So what is the most suitable view here? So if we remove this, the rest 4 zeros, you will get 30 to 15 to 5. Okay. 30 to 15 to 5. You can even simplify this. How? 1, 3 and 6. මෙන්න මෙහෙම simplify කරන්න පුළුවන් ඔයාට. You can get the ratio like that. Okay. So that is mathematics. Okay. Therefore, let's take 6 into 3 into 1. 6 into 3 into 1. So the basis is 6 into 3 into 1. 3 into 1. So altogether 6, 3, 9 plus 1, 10. So altogether 10. Therefore, if I want to calculate the cost allocated to, or the cost apportioned to manufacturing department, we need to take the total machine depreciation cost and we need to divide it by the total of this base. 6 3 9 1 10. Total is 10. So out of that 10, 6 is for manufacturing department. And for packing department, 3.5 million divided by 10 into 3. Into 3, it is for packing department. Then for technical, 3.5 million divided by 10 into 1. Into 1, it is 350,000. So if I get the total, you can see I can get 3.5 million. 3.5 million. 3.5 million. Okay, that's how you need to do. That's how you need to do. So likewise, you can now do. I will go with the second one. What is the second one? Someone's mic has been unmuted. So please mute, my dears. If you have a question, then you can raise. But we don't want to listen to your family members talk at the moment. Okay. Fine. Then the second one. Second one, what is that? Building rent. Lamai, building rent. Usually rent is paid for the square feet, for the floor area. Therefore, you can use floor area as the base. So I will write like this. Building rent. Building rent. Here, building rent. It is 3.6 million. 3.6 million. Yes, 3.6 million. What is the base now? Base, the floor area. Floor area. So it is square feet. Square feet. So let's take the proportion. Let's take the proportion. So we can get here 6, 9, 21. Okay. We can get 21, 9, 6. 21, 9, 6. Even you can simplify it. Simplify කරන්න පුළුවන්. 21, 9 and 6. So altogether 21 plus 9 is 30 plus 6 is 36. So 3.6 million divided by 36 into 21. It is the cost for manufacturing. Then 3.6 million, 3.6 million divided by 36 into 9 for packing department. Then 3.6 million divided by 30 into 6. It is for 36. I divided by 30. Fine. Okay. So now you got the allocation. Not the allocation, actually, it's the apportionment. Apportionment. Okay, fine. The next one. Let's see what is next. What is next? What is next? Supervision cost. Lamai supervision cost. We are supervising normally the employees. So supervision cost can be apportioned using number of employees. Why? We are supervising the employees? Ne? Therefore, this supervision cost. Therefore, this supervision cost can be apportioned using what? Number of employees. Number of employees. Number of employees. Let's take the proposition. Proposition 30, 60 into 1. That means 361. We can simplify and get as 361. 3 into 6 into 1. So altogether, the total supervision cost is how much? The total supervision cost is 800,000. 800,000. Put 800,000 here. Then this 800,000 divided by 10 multiplied by 3 for manufacturing. Then 800,000 divided by 10 into 6 for packing. Then 800,000 divided by 10 into 1 is for technical. Okay. Fine. Now we are done with supervision cost also. Then next cost. What is next cost? Quality control expenses. The total cost is 1 million. Quality control expenses. Total cost is 1 million. Let's put 1 million here. 1 million. So what is the most suitable method? Most suitable method. Quality control expenses. Now let's see the bases given. The quality inspections are given. Number of quality inspections. So based on number of quality inspections, you can allocate or the apportion these quality control expenses. There's a specialty here. When it comes to number of quality inspections, they are only for production department, nothing for service. Nothing for service. Okay. So make sure you do not apportion it into service. So number of quality inspections. Number of quality inspections. So it is how much? 12 into 8. 12 into 8. Fine. So altogether 20. Now 1 million divided by 20 into 12. And then again 1 million divided by 20 into 8. So nothing for technical. Nothing for technical. It's 0. 0 for technical department. Done. Then the next one. Then the next cost. It is finally the electricity cost. It is 3.6 million again. Let's put it. Electricity. It is 3.6 million. 3.6 million. So it is use of electricity, the kilowatts. Let's use that. They are 1062 here. 1062. Use of electricity, or else we can say kilowatts. kWh. So it is, let's see, it is 1062. 1062. So altogether it is 18. It is 18. So 3.6 million divided by 18 into 10. Then 3.6 million divided by 18 into 6. Then 3.6 million divided by 18 into 2. 18 into 2. Okay. Done. Now done. So all the apportionments are done now. Electricity also apportioned. Now, Lamai, that means our third step is done. So after that third step, we need to go for the fourth step now. Before we go into that fourth step, we need to write something. We need to get the total. Okay. Now get the total, my dears. Get the total of the amount column. Likewise, get the totals of other columns as well. Get the totals. Here I got. Here I got. So after getting the totals, you need to write something here. You need to write something here. A narration to these totals. Let's write. What is that? Total production overhead cost. The total production overhead cost. Okay. Gathered in cost centers. Total production overhead cost gathered in cost centers. Cost centers. I am not specifying whether it is production or service. The entire thing. Gathered in cost centers. Done. Then we need to do the reapportionment. Okay. We are doing the reapportionment for which cost? We are doing the reapportionment for which cost, my dears? We are doing the reapportionment for the technical division cost. Technical division cost. We need to do reapportionment. Here. So I am writing under basis reapportionment. Okay. What is the percentage or what is the base? Here you are given apportionment of technical cost. You need to apportion 60% to manufacturing, 40% to packing. That means the out of the total cost in technical department, we need to put 60 into manufacturing, balance 40 into packing. So let's do. So we need to remove the entire 1430. We need to remove the entire 1430. Okay, so I'm removing here minus. Then out of that, I need to add 60%. Itaning galola, we need to add 60% into manufacturing here. Wait, I will freeze this part, otherwise you can't see, no? Okay. So here I have taken 60%, making 60% got it. So I am adding that 60% to here. Then balance 40%. Balance 40% is to packing department. Balance 40% is to packing department. Done. So after doing this reapportionment, also you need to take the totals. After doing this reapportionment, you need to take the total. Here, under reapportionment, where the cell is active, if we get the total of the row, it will be 0. Why? This reapportionment will not impact to the total production cost. Why? Or the total overhead cost. Why? Because we are simply removing from service departments and adding that to the production department. We are not taking it off entirely. We are just removing it from the service departments and adding it to the production departments. Okay, adding it to the production department. That's all. Therefore, the impact on the total amount is 0. And then let's take the totals again. Here, 12,500. Likewise, you need to get the totals. Now you can see here, the service department cost is 0. Why? We removed the service department cost and we added that to the production department. Okay. So here you have manufacturing cost and the packing cost. Okay. Now again we need to write something. Here. Now we need to write the total production cost gathered in production cost centers. Here we need to highlight the production cost center. Production cost centers for absorption. These are gathered for what purpose? For absorption. Okay. These are for the absorption. Okay. These are for absorption. Done. These are for absorption. Okay. Great. Now this is how we prepare the overhead cost analysis sheet. Okay. ඔන්න අපි analysis sheet එක හදුවා. That's all. මෙච්චරයි analysis sheet කියලා තියෙන්නේ. මෙච්චර analysis sheet කියලා තියෙන්නේ. It's not that difficult. But මෙතනින් ඉවර නෑ ලා. මෙතනින් ඉවර නෑ. Okay. This is not the end. The question has another part, ne? Another part. There's another part. What is that? The question requires us to calculate the overhead absorption rate for each production department. We have 2 production departments, so we need to calculate the OAR for each department here. So I will put the topic 2.0, calculating OAR for both production departments. For both production departments. Now we are going to calculate the overhead absorption rate. Okay. So you know what's the formula? What's the OAR formula, my dears? Overhead absorption rate. Overhead absorption rate equals to budgeted overhead cost. Okay, budgeted production overhead cost divided by budgeted activity. So here, what is the budgeted activity, my dears? What is the budgeted activity? Here they say based on labor hours. Therefore, here budgeted labor hours. Budgeted labor hours. So we need to divide budgeted production overhead cost, okay, by budgeted labor hours. Okay, let's calculate for each department. This is for manufacturing. Here, manufacturing. What is the budgeted overhead cost in the manufacturing? It is the amount that we calculated, 7.898 million. Then we need to divide by what? We need to divide by budgeted labor hours. Go and see what is the budgeted labor hours for manufacturing department. Let's see. The manufacturing department's budgeted direct labor hours, it is 100,000. 100,000. So divide it by 100. 100,000. Divided by 100,000. Divided by 100,000. So you can get an answer. You can get an answer. So here it is 79. It is 79. 79. How to interpret this, my dears? How to interpret this? This is, we need to write. Even at the examination, you can't just put 79 and come. You need to write like this. Rupees 79 per direct labor hour. Per direct labor hour. This is how you need to keep the answer. 79 rupees per direct labor hour. Per direct labor hour. This is the overhead absorption rate. Per direct labor hour. Okay. This is for which department? Manufacturing department. Same, we need to calculate this for packing department also. So I'll calculate it here, otherwise you will it mix. So here the production or the packing department budgeted cost is how much? 4,602,000. You need to divide it by, let's see, you need to divide it by 200,000. You need to divide it by 200,000. You need to divide it by 200,000. So you will get an answer. You will get an answer. It is 23. It is 23. You need to write the answer like this. So it is 23 rupees. 23 rupees per direct labor hour. 23 rupees per direct labor hour. This is the overhead absorption rate. This is the overhead absorption rate. Overhead absorption rate. Okay. Done. Done. Hope you guys are clear. Please raise your hands if you understood. තේරුණා නම් පොඩ්ඩක් අත උස්සන්න බලන්න. Okay. කට්ටිය අත උස්සනවා කියලා කියන්නේ හොඳට තේරිලා තියෙනවා. Is that good? Is the way I explained it to you good? Tell me. තේරුණාද මං කියලා දුන්න විදියට? Okay. Fine, fine, fine. So I'm so happy to witness that. Kelamai. Great. Now let's move on to the second question. Second question. This is quite a really tested thing. A really tested thing. You can see here this profit reconciliation statement is tested only twice. Only twice. 1, 2, 3, 4, 5, 6. 6 exams were done. Okay. 6 exams were done. But only 2 times this profit reconciliation statement was tested. Therefore, I think this time it will be tested. මට නිකන් හිතුණා මේ සැරේ අහයි කියලා, but not sure. But not sure. Okay? Fine. ළමයි, what is meant by profit reconciliation statement? Okay. I will first of all give you the theoretical summary. When it comes to accounting for costs, okay, when it comes to accounting for costs in an organization, they can use two methods. They can use two accounting systems. One is integrated accounting system. One is integrated accounting system. Okay. Other one is non-integrated accounting system. Non-integrated accounting system. So both the methods are okay. Both the methods are okay. But what is the difference? But what is the difference between integrated accounting system and non-integrated? So lamai, when it comes to integrated accounting system, both the financial accounts, both the financial account plus cost accounts, both the financial accounts plus cost accounts are in one ledger. In one ledger. In one ledger. That's why we name it as integrated accounting system. Integrated accounting system. Both the financial accounts and cost accounts are in one ledger. Okay. But when it comes to non-integrated accounting system, we have two separate ledgers, one for financial accounting. So we have a separate ledger financial accounting. Then for cost accounts, we have a separate ledger. I would rather say ledger cost accounts. Ledger cost account. So lamai, we have two separate ledgers. We have two separate ledgers. So we have two separate set of accounts. We have two separate set of accounts. Okay. But in one ledger system, okay, in integrated accounting system, we do not have two separate ledger accounts. Two separate ledger accounts. Therefore, lamai, therefore, the profit we calculate, okay, the profit we calculate will be applicable for both financial and cost accounts. Okay, simply I would write the profit we calculate. ඔයාලත් ලියාගන්න මේවා. Okay, make notes of these summaries. The profit we calculate will be applicable for both accounts. For both accounts. Therefore, there won't be any differences between the profit. Why? There are no two profit figures. But when it comes to non-integrated accounting system, my dears, we have the profit as per financial accounts. We have the profit as per financial accounts, and then we have another profit as per cost accounts. Cost account. Since these two costs are, since these two ledgers are maintained separately, there can be differences between the profit as per financial accounts and profit as per cost accounts. Are you clear? there can be differences. There can be differences. Okay, there can be differences. So between the profit as per financial accounts and profit as per cost account. So what are the reasons? What are the reasons? Now, Lamai, when it comes to cost ledgers and financial accounting ledgers, the inventories may be measured. Okay, the inventories may be measured at two values, at two different values, at two different values. එහෙම වෙන්න පුළුවන් නේද ළමයි? When it comes to financial accounts, they have measured the inventories at total production cost. But when it comes to the cost accounts, they might have measured the entire inventory at total variable production cost. So likewise, inventories may be measured at two different values, at two different values. And also this inventory can be opening inventory or closing inventory. This inventory can be opening inventory or closing inventory. Okay. And what else? There can be some transactions. There can be some transactions recorded only in financial accounts. There can be some transactions recorded only in financial accounts. And at the same time, there can be some transactions recorded only in cost accounts. Recorded only in cost accounts. Cost accounts. So inventory may be measured at two different values. Then transactions recorded only in financial accounts. Some transactions may be recorded only in cost accounts. Lamai, due to these reasons, okay, due to these reasons, the profit calculated as per the financial accounts might differ from the profit we calculated as per the cost accounts. Cost accounts. Okay, fine. Now it seems that you have a small kind of an understanding. Then we are moving to another special concept before we start the question. Now I told you, due to the inventories might be measured at two different values, these two profits can be deferred. මේ දෙක වෙනස් වෙන්න පුළුවන්. Inventory වල value එක වෙනස් නිසා. So does the inventory affect to profit? ළමයි, does the inventory impacts on profit? Impacts on profit? Tell me. Put in the chat. Does the inventory impacts on profit? And if the inventory impacts on profit, through what it impacts to the profit? මොකක් හරහාද? මොකක් හරහාද? Impact එකක් කරනවා නම් මොකක් හරහාද? Put in the chat ළමයි. I am waiting for your answers. Put in the chat. Does the inventory impact on profit? Does the inventory impact on profit? Yes or no? Exactly, Sanuga. Inventory has an impact on profit through cost of sales. Very good. So what is the answer? Does the inventory impact on profit? Yes. Yes. Through what? Yes. Through cost of sales. Through cost of sales. Through cost of sales. Now let's see the impact. Why? We need to know the impact. Otherwise, we can't do the calculation. Okay, let's see. Here. I would take. So here, cost of sales or its impact on cost of sales. Therefore, impact on profit. Impact on profit. Fine. First of all, let's take opening inventory. Okay. Now, think if the opening inventory was recorded at a higher amount, okay, opening inventory, if the opening inventory was recorded at a higher amount, if the opening inventory was recorded at a higher amount, or else the opening inventory increases. If the opening inventory increases, what will happen? When the opening inventory increases, what will happen? The cost of sales will increase. The cost of sales will increase. You know how to calculate the cost of sales. How to calculate the cost of sales? ඒකත් මතක් කරගන්න නැත්තම්. ඒක අමතක වෙලා තිබ්බොත් තේරෙම ඉවරයි. How to calculate the cost of sales ළමයි? We take the opening inventory plus purchases less closing inventory equals to cost of sale. So here, when opening inventory increases, the cost of sales increases. When opening inventory decreases, the cost of sales decreases. Therefore, when opening inventory increases, the cost of sale increases. You know cost of sales is an expense. Therefore, the profit will be reduced. Same, when the opening inventory reduces, the cost of sales also will be reduced. Then the impact on profit, the profit will be increased. The profit will be increased. So on the other hand, what is the impact of closing inventory? What is the impact of closing inventory? What is the impact of closing inventory? So lamai, if the closing inventory increases, what will happen? බලන්න මේ cost of sales formula එක. When the cost of sales, the closing inventory increases, the amount that we deduct will increase. Therefore, the cost of sales will be reduced. Okay, so when the closing inventory decreases, the amount that we need to reduce will be decreased. Therefore, the cost of sales will be increased. When the closing inventory increases, the cost of sales will be reduced. Therefore, when the cost of sale is reduced, the profit will be increased. Then when the closing inventory reduces, the cost of sales will be higher or increased. Therefore, the impact on profit will be decreased. Therefore, Lama, you can identify a relationship. So the opening inventory and the profit. The opening inventory and the profit has a positive relationship. Sorry, not a positive relationship. Opening inventory and the profit has a negative relationship, a minus relationship. You can see when the opening inventory increases, the profit decreases. But the closing inventory and the profit has a positive relationship. Okay. Now, if you have this understanding, you can easily catch the paper. Please raise your hands if you were able to recall your memory. මතකය අවදි කරගන්න පුළුවන් වුණා නම් පොඩ අත උස්සන්න. ඉන්ට්‍රස්ටිං වගේ නම් අත උස්සන්න බලන්න. Okay, great. Fine. Now let's move on to the question, my dear. Wait. Okay, I just ran to drink some water. Okay, now let's move on to question number 2. Let's see. Tharu Sweets Private Limited, which is a company engaged in manufacturing sweet items, uses a non-integrated accounting system. Okay, now you know when it is a non-integrated accounting system, we have separately a financial accounting ledger and we have separately a cost account ledger. So the profit shown in the financial accounts for the year ended, the profit shown in the financial accounts. This is quite important. The profit shown in the financial accounts for the period ended December 2023 was 260,500. Okay, it's important. While a profit of, here I have kept a blank. I haven't given you the profit as per cost accounts. I have given you the profit as per cost accounts. So now by the question itself, you can understand what is I am asking you to do. I am asking to calculate the profit as per cost accounts based on or through profit reconciliation. Okay, let's see, is that the requirement? Yes. You are required to prepare a profit reconciliation statement between financial accounts and cost accounts and identify the profit as per cost account. So you need to do two things. Number one is to prepare the profit reconciliation statement. Number two, to identify the, or else number two, you need to identify the profit as per cost accounts. Profit as per cost accounts. Okay, this is quite easy, Lamai. This is quite easy. Let's do it in our way. Okay. අපි අපේ විදිහට කරමු. එතකොට ඔයාලට මේක මාර ලේසි. Now, when you are doing a reconciliation, even in the bank reconciliation, you take what you have to the top. You know, what you have the profit as per financial accounts. Therefore, you put it at the top. Okay. 260,500. 260,500. This is what we have. So I have put it to the upper side. Now, compare. This is what I am going to compare. Okay. This is what I am going to compare. So compare and I am going to get the profit as per cost accounts. I am going to get the profit as per cost accounts. Okay. Fine. Let's see whether we can do it. Now, let's move on to the reasons given here. Reasons for the differences are follows. Number one, stock valuation. As I mentioned, as per the cost accounts and as per financial accounts, the stock values are different. First, take the difference. Even at the examination, first of all, take the difference. Here, 135,500, then 145. 145. How much is the difference? It is just 500. It is just 500. Take the difference. Then, next point. මම හරිනේ මම කෝකටත් කැල්ලෙන් ගහලා බලන්නද මට සමහරලාට හිතින් හදනවා වරදිනවා ළමයි 500 නෙමෙයිනේ it's 9,500 9,500 the difference okay then next one closing stock difference එක බලන්න 173,600 less 174,200 it is just 600 the difference don't put plus or minus just put the difference as a figure okay fine now we need to think on the impact of profit here you can see you have the stock as per financial accounts now the difference is 9,500 now it's very clear lamai opening stock is higher okay opening stock is higher as per financial accounts at a value of 9,500 so as per financial account value is higher now when the opening stock balance as per financial account is higher you know the cost of sales value is what how the opening stock is වැඩි නම් when the opening stock is higher the cost of sales value also higher cost of sales value also higher means how it will impact on the profit the profit will be lower now as per financial statement or the financial account opening stock value is higher the profit as per financial account is lower when compared to the cost account. When compared to the cost account. So Lamai, here the profit as per financial accounts is lower when it compared to the cost account. Therefore, now we are going to reconcile a lower value with a higher value. Here you are going to reconcile a lower value with a higher value. To reconcile a lower value with a higher value, what you need to do? You need to add the difference. You need to add the difference. You need to add the difference. Therefore, I will put here opening stock. Opening stock, and I will add the difference 9,500. I will add the difference 9,500. I will add the difference 9,500. Okay, done. Then the next point. Then the next point. You can watch the recording also, okay? Then the next point. Closing stock. Now, you can see closing stock difference is 600. So, which is higher? Again, the closing stock as per financial accounts is higher. Lamai, when the closing stock is higher, okay, when the closing stock is higher, you know cost of sales is lower, therefore the profit is higher. So when the closing stock is higher, cost of sales expense will be lower, therefore the profit will be higher. Therefore, due to the higher or due to the difference in closing stock as per cost accounts and financial accounts, it had resulted in, okay, a higher profit as per financial accounts. So Lamai, when we compare the profit as per financial accounts with the profit as per cost accounts, due to the closing inventory difference, profit as per financial accounts is higher, profit as per cost accounts is lower. So to reconcile a higher value with a lower value, what you need to do? You need to deduct the what is there in addition. වැඩිපුර තියෙන ටික අයින් කරලා දාන්න ඕන. So you need to deduct. එහෙනම් so I am deducting closing stock. Here closing stock difference. I would rather put difference so it will be easy to understand. The closing stock difference. First one, opening stock difference. So the closing stock difference is 600. I need to reduce. So I need to deduct. I need to deduct. Done. I deduct. So first reason is done. Then the second reason, let's see. Interest income received on fixed deposit rupees 35,000 has only recorded in financial accounts. Lamai, this is an income. When an income is increased, you know profit will also increase. Now you see the interest income received on fixed deposit has recorded in financial accounts but not recorded in cost account. Therefore, in financial accounts, they have recorded an additional income. Since they have recorded an additional income, it's very clear that the profit as per financial account is higher when compared to the cost account. Why? This 35,000 income is not included in the cost accounts. Therefore, what is the impact here? What is the impact? The profit as per financial accounts is higher. Profit as per cost account is lower. Therefore, we need to deduct. Therefore, we need to deduct. So I am deducting here. I am deducting interest income. Interest income. How much? 35,800. 35,800. 35,800. Okay. 35,800. Done. Done. Then next point. Next point. Let's see. Consulting fee of 45,000 has been charged into financial accounts, whereas it has not been charged to cost accounts. Now my consulting fee, usually the term they have given is charged. So we are charging the expenses, Laman. We are charging the expenses. So this consultancy fee expense of 45,000 has recorded only in financial accounts. That means we have recorded an expense. So when an expense is increased, you know the profit will definitely reduce. Now, as this consultancy fee expense is recorded only in financial account and not recorded in cost accounts, it's very clear, Lamai. The expenses as per financial accounts is higher, therefore the profit is lower. Therefore, as a result of this incident, what has happened? What has happened? What has happened? Here, the profit has been reduced. Profit take adui. The profit as per financial account is lower when compared to the profit as per cost account. Therefore, we need to add. Therefore, we need to add. So add consultancy fee. So add consultancy fee. So add consultancy fee. How much? It is 45,000. It is 45,000. As the consultancy fee expense is not recorded in the cost accounts, okay, the cost account profit is higher. එහෙම වෙන්න එපා expense එක ලියලා නැහැ. ඒක higher. Then overhead cost as per cost account was 555,000 and it was 545,000 as per financial account. Now you can see there's a difference. There's a difference of 10,000. So overhead cost as per cost account is higher. Overhead cost as per financial account is lower. Therefore, simply if we look at the point of view of financial accounts, the financial account overhead cost expense or the overhead cost is lower. So it is an expense. When an expense is lower, the profit is higher. Expense එක අඩුයි කියලා කියන්නේ profit එක වැඩි. Therefore, as a result of this, the profit is higher, my dears. The profit is higher. එහෙනම් profit higher as per financial accounts, then the profit lower as per cost account. Therefore, to reconcile, we need to reduce from the higher value. එහෙනම් අයින් කරන්න higher value එකෙන් මොකද්ද? Overhead cost. Overhead cost. Reduce the overhead cost. Reduce the overhead cost. How much? 10,000. 10,000. 10,000. 10,000. Okay. Next point. Next point. Depreciation charge as per cost accounts was 265 and it was 310 as per financial accounts. මෙතන මොකද වෙලා තියෙන්නේ? Financial accounts වල බලන්න financial accounts වල depreciation expense එක වැඩියෙන් record කළා. They have recorded a higher depreciation charge in financial accounts. The difference is 45,000. That means lamai, in financial accounts, expenses are higher by 45,000 than the cost accounts. Therefore, when the expenses are high, profit is low. Therefore, due to this impact, the profit as per financial account is lower by 45,000 when compared to the cost accounts. Therefore, here profit as per financial account is lower, then the profit as per cost account is higher. So to reconcile it, we need to add. So add depreciation charge 45,000. Add depreciation charge 45,000. Add depreciation charge 45,000. Okay. Fine. Then the last one here. Audit fee 75,000 has been charged only in financial accounts. Another expense, Lamai. This expense has only charged in financial accounts. That means the expenses as per financial accounts is higher. It will result a lower profit. So due to this error, the profit is lower by 75,000 in financial accounts. So Lamai, here the same thing again. The profit is lower in financial accounts when compared to the cost account. Therefore, we need to add. So let's add what? Audit fee. Let's add audit fee. How much? 75,000. Let's add audit fee 75,000. Okay. 75,000. Done. Done. Very good. So now you can calculate the cost as per cost accounts or the profit as per cost accounts and put in the chat. බලන්න chat එකට දාන්න. හදලා. chat එකට දාන්න ළමයි හදලා. chat එකට දාන්න හදලා උත්තරේ. chat එකට දාන්න හදලා. So you need to add all together 174,500. Then you need to remove altogether 46,400. So you will get the profit as per cost accounts as how much? 388,600. 388,600. 388,600. Okay, 388,600. So those who got the answer, please put a react. බලමු chat එකේ උත්තර ඇවිල්ලා තියෙනවා. මේ answer එක ආපු කට්ටිය react එකක් දාන්න. කවුරු උත්තර දාලා නැහැ, but even if you got the answer, please raise your hand. I can see two people. I can see two people. Okay. Okay, great. Fine. Now let's go for the question number 3. Let's go for the question number 3. It's a partnership question. Now, in this partnership question, I am not going to teach you the entire summary because it is quite long, you know. So I will directly explain the question. Okay. Directly work out the question. While working out that, I will teach you the theoretical part. Okay. Here is the past paper analysis. This is the past paper analysis. You can see almost all the papers except for 2023 Jan, they have tested the capital account and the current account. Capital account and the current account. Therefore, I am predicting this time also there can be a capital account and a current account. Okay. And also here you can see the trend. 2021 January, retirement tested, goodwill tested, revaluation tested. 2022 January, retirement tested, goodwill tested, revaluation tested. But 2023, commencement of a partnership is just tested. It's very easy. And I am predicting this time also a retirement, goodwill and revaluation can be tested. This is just a prediction. I'm not sure. Okay. Fine. Therefore, based on this prediction, I have prepared the question. Let's go ahead with that. Okay. Let's read. First of all, let's see what is the requirement again. You are required to prepare the following for the year ended 31st December 2023. Partners current account and partners capital account. Current account and the capital account. Current account and the capital account. Okay. Rule කරගන්න බෑ. Please draw the formats. Please draw the formats. Who are the three partners? Anura, Sajid and Ranit. Marut partners lane. Anura, Sajid and Ranil. Anura, Sajid and Ranil. Okay. So I will give you 2 minutes. Draw these things. You need to write, okay? You need to write partnerships, partners, capital accounts for the period ended. Likewise, you need to write. You need to write. It's a requirement. Okay. ඒක ලියන්න ඕනේ. එතකොට තමයි ලකුණු හම්බෙන්නේ. එතකොට තමයි ලකුණු හම්බෙන්නේ. Okay. I will give you 2 minutes till 8:32. Make sure that you draw it. Okay, time is up. Time is up. Now let's start working out the question. Okay, let's read first. Anura, Sajit, and Ranil are in a partnership. As are partners, sharing profits or losses in the ratio of 5 to 3 to 2. 5 to 3 to 2. So that means those are respective ratios. Okay. Anura will get 5, Sajit will get 3, Ranil will get 2 out of 10. Okay. The partnership agreement provides the following. Lamai, the partnership agreement. Whose partnership agreement? Anura, Sajit plus Ranil. All together, all these three people's partnership agreement. Okay. Interest on capital 10% per annum is paid on the opening capital account balances. It is pretty much important. So this will get at the opening capital account balances. Then Sajit is entitled to receive a monthly salary of 50,000. Sorry, monthly salary එකක් monthly. අන්න ඒකේ monthly කියන වචනේ වැදගත්. Then the following balances were extracted from the trial balance of the partnership as at 31st December 2023. That means at the year end. These things you need to focus. The balances are at year end. Okay. The debit and credit balances are given. Capital account as at 1st January 2022. Sorry, it should be 1st January 2023. Okay. Correct it. 1st January 2023. Okay. These are not 2022. It's 1st January 2023. Okay. That means year beginning. Year beginning. Current account balances are also given at year beginning. Year beginning. Fine. මේ දේවල් ඔයාලා ලියා ගන්න ළමයි exam එකේදීත් ලියන්න. You need to write down. Why? Because it will make you easy to do the question. It will make you easy to do the question. And then drawings are given. Drawings are given. So drawings, you know. What are drawings? Drawings means the partners are taking company's assets to the personal use. So when the partners take the company's assets to the personal use, this will impact on a reduction in equity. How to record this reduction in equity in the partnership accounts? We need to debit these to current accounts. We need to debit these to current accounts. That's what is the accounting treatment for drawings. Why? To show the reduction in the equity. To show the reduction in the equity. Okay, fine. Now let's put these balances. Balances තියෙන එක අපි ඔය ටික දාගෙන යන්න ළමයි. අපරාධනේ නැත්තම්. Balances දාගමු. I will put the balances. Anura 6,000 credit in rupees 1,000. Sajid 4,500. Ranil 3,000. Okay, let's put opening balances. Ekai 2023 1st January. So balance brought forward BBF. So 6,000, then 4,500, then 3,000. 3,000. Okay. Then current account balances. Anur has a credit balance of 1,100. Let's put here. Anur has a credit balance of 1,100. But Sajid has a debit balance. Sajid has a debit balance. How much? Sajid has a debit balance of 850. Then Ranil again has a credit balance. Ranil again has a credit balance of 600. Okay. If the balance is in credit side, then you need to put it in credit side. If the balance is in debit side, then you need to put it in debit side. Simple. Okay. Then we have put these things. Now, Lamai, you can put or you can record these drawings also. You know the accounting treatment, therefore you can record these drawings. How? You need to debit these drawings into current accounts. 1,200, 800, and 350. Okay. You need to debit. Just debit. Debit to the partner's current accounts. Drawings. 1,200, 800, and 350. 350. Done. Okay. Then the net profit of the partnership is given. Net profit of the partnership. Okay, we need to appropriate this net profit, Lamai. We need to appropriate this net profit. Okay. Therefore, we need to do a separate working. Even at the examination, you need to do that separate working. Here, I will take the working number 1. You also take working number 1. Net profit appropriation. Net profit appropriation. This working need to be done. Net profit appropriation. First of all, take the draft net profit. The given drafted net profit. Okay. How much is the drafted net profit? Tell me. How much is the drafted net profit? 5.5 million. So in rupees 1,000 is 5,500. These are also in rupees thousands now. Rupees thousands. So it's 5,500. Now we need to do appropriation. Okay. Let's learn a theoretical aspect now. Okay. Fine. Lamai, in partnerships, okay, the profit, okay, the profit earned by the partners or else the profit generated through the partnership business need to be splitted among partners. This need to be splitted among partners A, B, and C. Okay. This splitting is known as simply the profit distribution or else profit appropriation. However, to distribute the profit, okay, we can use several methods. We can distribute the profit by way of interest on capital. We can distribute the profit by way of interest on capital. We can distribute the profit by way of what? By way of wages to the partners. Then another way, by way of the profit share. Profit or else loss share. Okay. So this partnership profit can be distributed among partners using three types. One is interest on capital, wages to the partners. Other one is profit or loss on share. Okay. Since this is the profit distribution, okay, this is profit distribution. That means we are giving what they entitled. We are giving the entitlement. We are giving the entitlement to the partners. We are giving the entitlement to the partners. Therefore, if we are giving the entitlement, it will result in an increase in the equity. Okay. When we are giving the entitlement, it will result in an increase in the equity. Therefore, to show this increase in the equity, we need to credit all these three into the current account. We need to credit these three into the current account. We need to credit these three into the current account. Therefore, in a question, if you are required to calculate the entitlement, okay, to do the profit apportionment, what you need to do, you need to increase the equity, you need to credit current account. Current account. But a problem is there. But a problem is there. Assume in case, okay, if the partners, make notes, okay, in case if the partners taken have taken interest on capital, have taken interest on capital and wages by way of cash. Wages by way of cash. If they have already taken the wages and the interest on capital by way of cash, then the balance amount payable will be reduced. No, the amount payable will be reduced. Therefore, simply keep in your mind, if the partners have taken the interest on capital or wages by way of cash, then it will result in a reduction in equity. It will result in a reduction in equity. Therefore, to show that, we need to debit such thing into current account. We need to debit such thing into current account. We need to debit such thing into current account. Okay. Fine. So please raise your hands if you got a recap of a knowledge what you have already learned. ඉගෙනගෙන තිබ්බ දේ පොඩ්ඩක් recap වුණා නම් පොඩ්ඩක් අත උස්සන්න. Only four. How about the others? How about the others? Okay. හින්දි නෑ නේද? Good. Fine. Now let's move on to the question again. So here earlier we saw this thing. අපි මෙන්න මේක දැක්ක. මේ මොකද්ද? Partnership agreement එක මෙන්න මේ දේවල් provide කරනවා කියලා කිව්වා. So interest on capital and salary. Fine. අපි පල්ලහැට එමු. ඊට පස්සේ අර ටික බලමු. Number 4 here. On 31st December 2023, Ranil decided to retire from the partnership. Ranil decided to retire from the partnership due to his family commitments. And Anura and Sajit agreed to continue the partnership profit share in a loss or profits at a 3:2 ratio. Lamai, this is the new profit sharing ratio. New profit sharing ratio. Why? Why? Since Ranil is retiring, Ranil will be no more. Therefore, the entire profit now will be divided by or benefited by Anura and Sajid. They will take the entire profit. Anura will take 3 out of 5 and Sajid will take 2 out of 5. Okay, that is the new profit sharing ratio. What was the old one? Old one was 5:3:2. Here, 5:3:2. It was the old one. 3:2 is the new one. Okay. Now we are moving to the retirement phase. what we need to do at a retirement. Let's come back to the theoretical part again. Okay. Retirement of a partner. Make notes, okay? Retirement of a partner. Partner. Now, this retirement, at the date of retirement, we need to do few things. So first of all, we need to look at on which day this partner is retiring. So this retirement of a partner can be happened at the year beginning. Can be happened at the year beginning, and this can be happened at the year end. At the year end. Now, depending on the date, some things are different. Why? Lamai, if the partner retire at the year beginning, do we need to give a share of profit or a profit share from the current year's profit? If the person is retiring from the first day of the current year, for what sake we are going to give a profit share to him? We are not going to give a profit share to him. Therefore, if the partner is retiring at the year beginning, no profit share is entitled. No profit share is entitled from current year. From current year. Okay. But if the partner is retiring at the year end, then partner is entitled to a profit share from current year. From current year. He is entitled. He is entitled. Okay. Fine. Therefore, what are the steps we need to follow? First of all, we need to appropriate the profit. Sorry. It depends on the situation. Therefore, let's see if the partner resigns at the year beginning. So no need to appropriate the profit. Therefore, we need to do the goodwill adjustment. I will teach you how to do. We need to do the goodwill adjustment. And number two, we need to do the revaluation adjustment. We need to do the revaluation adjustment. Number three, we need to record the balance amount payable. We need to record the balance amount payable. Sometimes it can be recorded as a loan. Sometimes it can be recorded as a loan. As a loan. Okay. Fine. So if the retirement is done at the year end, if the retirement is done at the year end, our very first step need to be what? Appropriate the current year profit. Appropriate the current year profit. Then we need to do the goodwill adjustment. Then we need to do the goodwill adjustment. Why? Why we are doing the goodwill adjustment, Lamai? We need to do the goodwill adjustment as up to now, this partner also contributed to earning the goodwill. Therefore, at the date he retire, we need to give him what he has earned. We need to give him what he has earned. That's why we are doing the goodwill adjustment. Number three, revaluation adjustment. Revaluation of PPE. Revaluation adjustment. Then number four, recording the balance payable. Record the balance payable. Record the balance payable. So this is how we need to do the retirement part. We need to do the retirement part. So Lamai, it's very easy. I will simply say how to do the goodwill adjustment. It is very easy. At your examination, you need to get the total goodwill of partnership. Okay. You need to get the total goodwill of the partnership and debit to the capital accounts. Okay. debit to the capital accounts at the new profit sharing ratio. Okay. Debit to capital account at new profit sharing ratio. At new profit sharing ratio. Summary කියන්නම් ඔයාලට. එතකොට ලේසි. At new profit sharing ratio, and then we need to credit the capital account. We need to credit the same capital account at old profit sharing ratio. At old profit sharing ratio. So simply, when you are required to do the goodwill adjustment, as this is a revision session, I am not going to discuss the entire theoretical aspect. Okay. But what you need to simply do is you need to debit capital account at the new profit sharing ratio and credit capital account at the old profit sharing ratio. And next adjustment, how to do the revaluation adjustment. So if the PPE are kept at revalued amount, if the PPE are kept at revalued amounts, then you need to do the adjustment like this. Then you need to do the adjustment like this. How? Since the assets are kept at the revalued amounts, we need to debit the assets. We need to credit the capital account. We need to credit the capital accounts at old profit sharing ratio. At old profit sharing ratio. At old profit sharing ratio. Done. It's very easy. Old profit sharing ratio එකට අපිට දාන්න විතරයි තියෙන්නේ. Okay. Please get a screenshot of this. And raise your hands if you revised or if you were able to recall your memory. මේ මේක මතක් කරගන්න පුළුවන් වුණා නම් අත උස්සන්න. Good. Okay. Now let's do the balance part. Okay. Now we have to just do the question. Okay. Question fine. Now this person is retiring at the year end. At the year end. Then at the year end. If at the year end, first you need to do the what? First you need to do the profit apportionment. Hari. Profit apportion කරන්න පුළුවන් ක්‍රම මොනවාද? Interest on capital. 10% per annum ගෙවන්න ඕන. Okay. When we show the entitlement, what will happen? We need to increase the equity. We need to credit the current account. Okay. Here. On a credit karna current account. Interest on capital. 10% at the opening balance. Here, this is the opening balance. Multiply it by 10%. So 600. So it is 600. And then 450 and 300. So interest on capital. Fine. Then salary. Who is entitled to the salary? Only Sajit is entitled, no? Sajit is entitled to a monthly rupee 50. 50 into 12. If you put just directly 50, then it is wrong. So 50 into 12, it is 600, no? 600. It's 600. So we need to credit that to Sajit. So partner salary. credit that to Sajid. It's only for Sajid, okay, 600. Fine. Now, let's see how much of profit out of 5,500 has been distributed as interest on capital and salary. So, out of the total profit, we have distributed as interest of capital how much? How much? Altogether how much? 600 plus 450 plus 300. එහෙනම් බලන්න ඔක්කොම කීයක්ද කියලා? 3i 450 and 300. So altogether 1350 has been distributed as interest on capital. And then as salary. Then as salary. Then as salary how much? It's just 600. Salary විදිහට අපි 600 දුන්නා. Salary විදිහට අපි 600 දුන්නා. So if we have given 1350 and okay and 600 as salary, so how much is the balance that we have to apportion as profit share? We have 3550 to apportion as profit share. Okay, now let's calculate the profit share. Profit share. Since this profit apportionment is resulting a profit share to Anura, Sajid, Ranil, all, we need to use the old rate. So here I would take Anura, Sajid, and Ranil. So what is the rate? It was 5. Sorry. Anura, it was 5. Then Sajid, it was 3. Ranil, it was 2. Ranil, it was 2. So let's calculate. 3550 divided by 10 into 5. Divided by 10 into 5. 3550 divided by 10 into 5. So it is 1775. Then 3550 divided by 10 into 3. Into 3. එහෙනම් මේක බෙදුවා 10න් වැඩි කරා 3. Then divided by 10 into 2. Divided by 10 into 2. So it's, let's check whether the answer will become 0. Yes, the final answer will become 0. Why? We have apportioned the total profit. So now we can record the profit share. It is also an increase in equity. Okay, profit share 1775, 1065 and 710. 710. Okay, done. Done. Well done. So this is done. Profit share done. Fine. After doing this profit share thing, what we need to do? We need to do the goodwill adjustment. So the goodwill of the partnership was valued at 1500 as at 31st December, and it was decided to adjust to the partner's capital account. So you know now, when we have the full entire partnership's goodwill, we need to debit it to the capital account at new rate and credit it to the capital account at old rate. That's all. Let's do. Debit at new rate. Okay, debit at new rate. Kirti naame මොකද්ද? Goodwill. Debit at new rate. So 1500 divided by, what is the new rate, Lama? What is the new rate? It's 3 into 2, ne? 3 into 2. So divided by 5 into 3. Divided by 5 into 3. Debited to Anura. Then 5 into 2 divided 1500 divided by 5 into 2 is debited to Sajid. Okay, so all together is 1500. And then I need to credit goodwill at old rate. 1500 divided by 10 into 5 for Anura. Okay, then 1500 divided by 10 into 3, 4, Sajid. Then 1500 divided by 10 into 2, 4, Ranit. 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 Okay. So we have done the goodwill adjustment. We have done the goodwill adjustment. ඒකට මොකුත් working එකක් ඕනේ නැහැ ළමයි. Simplyම හදලා දාන්න පුළුවන්. Goodwill adjustment. We have done the goodwill adjustment. Okay. Done. Okay. Then the revaluation adjustment. Revaluation adjustment. Now you must know how to calculate the revaluation gain or loss. How to calculate the revaluation gain or loss. Let's revise it. LKS 16. LKAS 16 PPE standard revaluation. I will recall the memory. Revaluation. How to calculate the gain or loss? Revaluation gain is where, okay? Revaluation gain is when, okay? Revaluation gain is when the revalued amount, or else we can say it's the fair value. The revalued amount is higher than the carrying amount. Higher than the carrying amount. So carrying amount means what? The cost less accumulated depreciation. The cost less accumulated depreciation. So revaluation loss is equal to where revalued amount is lower than the carrying amount. It is lower than the carrying amount. So same thing, cost less accumulated depreciation. Okay, cost less accumulated depreciation. Fine. Good. Okay. Now, this is how you need to do the revaluation gain or loss calculation. Let's do it. So you can take the working number 2. Working number 2, W2, revaluation adjustment. Revaluation adjustment. So what you need to take? You need to compare. You need to compare the revalued amount. Revalued amount. Revalued amount with the carrying amount. Revalued amount is the carrying amount. Okay. Then you can get the gain or loss. Let's do the calculation, Lamai. First we have land. First we have lands and buildings. L and B. L and B. Lands and buildings. Lands and buildings. How much is the revalued amount here? Revalued amount is 7,000. Revalued amount is 7,000. Then the carrying amount. How much is the carrying amount? Cost is 8,000. Accumulated depreciation 2,500. So 8,000 less 2,500. 8,000 less 2,500. So the carrying amount is 5,500. Now you can see revalued amount is higher than the carrying amount. That means, Lamai, there's a gain. That means there's a gain. How much? 1,500 gain. 1,500 gain. 1,500 gain. Very easy. Then next point. Next adjustment. Motor vehicles. It's motor vehicles. MV. The revalued amount. The revalued amount is 3,500. Revalued amount is 3,500. Cost is 4,000 and accumulated depreciation is 1,400. So carrying amount is 4,000 less than 1,400. So it is just 2,600. Now 2,600 carrying amount with motor vehicles were revalued at 3,500. So it is definitely a gain. It is definitely a gain. So Lamai, what is the total gain here now? What is the total gain? It is 2,500. So 400, sorry. It is 2,400. Now what you need to do? As I said, this 2,400 gain need to be given to the partners at old rate. So as we are going to give it to them, we need to credit the partner's current account, okay, at old rate. Old rate. You know? Not the current account actually. It should be done to the capital account. Therefore, here I am recording the revaluation in the capital account. It is 2,400 divided by 10 into 5. Divided by 10 into 5 for Anura. 2,400 divided by 10 into 3 for Sajid. 2,400 divided by 10 into 2. 10 into 2 for Rani. It is for Rani. It is for Rani. Okay. Done. 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 Revaluation done. Then it was decided to transfer the amount payable to Ranil at his retirement to a loan account. Okay. We need to calculate the total amount transferable to Ranil, and then we need to record it as a loan. Okay. Another theoretical aspect. So how to record the balance payable? There is an order to record the balance payable, my dears. There is an order to record the balance payable. First of all, number one, transfer the current account. Transfer the current account balance to the capital account. Make it again. First of all, we need to transfer the current account balance to the capital account. Then number two, then record any cash given to the retiring partner. Cash given to the retiring person. Cash දීලාද කියලා. Cash දීලා නම් cash credit current account debit. How to record? කොහොමද ඒක? එකක් ලියා ගන්න. How to record? Debit capital account. Debit capital account, not the current account. Debit capital account, credit cash. Debit capital account, credit cash. Finally, transfer the balance amount into a loan account. Finally, transfer the balance payable into a loan account. Transfer the balance payable into a loan account. Okay. Done. Now let's do this. Transfer the current account balance into the capital account. හරි. Transfer කරමු. රනිල් යන්නේ. රනිල්ගේ current account එකේ තියෙන balance එක transfer කරන්න ඕන. Okay. So මම මෙන්න මෙහෙම ගහ ගන්නවා. So I'm going to transfer Ranil's balances. So Ranil's credit balance 1,610. 1,610. So here I can get the current account balance as 1,610 less 350. So here it is 1,260. I am going to transfer this to where? Capital account. Capital account. So debit to partners current account. Debit to partners current account. Credit to partners capital account. So partners capital account. So this is receiving from current account. How much? It is 1,260. It is 1,260. Okay, done. Then what we need to do? Then if there is a cash payment made to the retiring partner, we need to record it. But here, Raniltani, we are not doing a cash payment. Cryptocurrency වලින් ගෙවලා තියෙනවා. Okay. Just kidding. So take the Ranil's account balance here. It is 5040. The transfer this entire 5040 into Ranil's loan account. Ranil's loan account. Ranil's loan account. Okay. Transfer this 5040 into Ranil's loan account. Ranil's loan account. Done. Then you can balance off the other two partners as well. You can balance off the other two partners as well. Fine. So here you can take the carried down balance. So this is 31st December 2023. Balance carried down. For Anura, it's 2275. For Sajid, it's 465. Ranil, nothing to carry forward. Nothing to carry forward. Nothing to carry forward. Why? Because he left the partnership. He left the partnership. So what he's going to carry? 24 balance brought forward. Done. Then you can do the same for partners capital accounts also. Capital accounts වලටත් මේ හතර එකම දෙන්න පුළුවන්. Okay. So here you are going to get the balance carried down. You are going to get the balance carried down. For Anura, it's 7050. For Sajid, it's 5070. 5074. Anil, nothing. Why? There's nothing left for Anil to carry forward because he retired. Because he retired. Because he retired. Done. 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 So here, capital account we learned, profit appropriation we learned, revaluation learned, goodwill adjustment learned, retirement learned. So seems like the entire question is now learned. Now learned. So you can easily complete the partnership question at the examination. You can easily complete the partnership question at the examination, my dears. Okay, done. 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 Fine. Please raise your hand those who think that you got an understanding when I was discussing this. මේක හොඳයි කියලා හිතන කට්ටිය අතුස්සන්. මේව කරපු එක හොඳයි. ඔයාලට මේක තේරුණා කියලා හිතන කට්ටිය. Okay. Good. Fine. Thank you. Thank you so much, sir. Thank you so much. Fine. Fine. Now the time is actually up. Okay. Time is up. So I thought of concluding the session with these three questions. Okay. With these three questions. But don't worry. Don't worry. Since you have the access to this WeLearning portal, I will upload a small recording by discussing that paper. Okay, the last question, the non-profit organization question. By discussing that non-profit organization question, I will be uploading a small video. Okay, small video tonight. I will upload it, so you can you can watch it. Anyway, I know most of you are very familiar with the financial accounting part, as now one of your mates put a message. Okay. Only cost accounting little bit difficult. Yes, I know, because most of you are very familiar with financial accounting. Okay. Most of you are, but the thing is, most of you are not very much familiar with cost accounting. That's why I first took overhead analysis sheet, then the reconciliation. Okay. So if you were not understood, please watch this again and again. Therefore, you can revise, my dears. Therefore, you can revise. Okay. So this marks the end of the live session. I believe that you guys enjoyed the session. Please raise your hand if you enjoyed. Okay, the Hyundai. I don't know whether I am uh, good for you. So I will give you my number. Okay, I will put my number into your chat. Okay, I will put my number into your chat and with my name. Okay, now what done? Okay, now what done? Okay. So this is my number and my name. You can connect me through WhatsApp, Facebook, or any social media. Okay, any social media you can connect with me. So from the bottom of my heart, I am wishing you all the very best for your upcoming exams, my dears. Okay. Hope I believe that within this 2 hours period, I was able to revise your knowledge on three key areas. Three key areas where if those are tested, you can get 20 to 30 marks. 20 to 30 marks. Therefore, please make sure you work on these topics. Please make sure you are doing your studies well and make sure you are making you yourself proud. Okay? So work hard. You have only 2 weeks now. You have only 2 weeks. So work hard. If you have any doubt, just put a text message. Even you can give the feedbacks through that number. The feedbacks are highly accepted, and the feedbacks are really appreciated from you because it's kind of a motivation for me. Therefore, you can send them through WhatsApp. And I believe that we can meet uh, with new subjects in upcoming examinations. So till then, bye bye, good night, see you all. Have a great time, and I am wishing you all the very best for your examination. Good night and God bless you, my dears.